Anthony, you are our you're our tax manager, tax partner here at Innate, and much loved, I must say, from that point of view. And the big change is on the capital gains piece. So let's start with that one. Now, for those for those at home, last night the changes in capital gains were pretty enormous. So I guess in talking that through, Anthony, what are those changes and what is the government proposing?
Thanks, Luke. Yeah, and it is big reform, but we knew something was coming. They'd been talking about this for several weeks. What we didn't know was what the nature of what sat underneath and how it was all going to play out. So for capital gains tax, from 1st of July, the government will revert to an indexation system based on CPI. Now, for those old enough to know, that's the same system that operated between 1985 and 1999. So that will take effect from 1st of July 2027. Now, the intention is with capital gains is that a minimum tax rate will apply on any gains made post that date at a minimum of 30%. Now, there's only a few exceptions to that. Now, the other thing which we didn't see coming, or I didn't anyway, was pre-CGT assets. So these are assets that were acquired pre-20th of September 1985 when capital gains tax reform was first introduced. The exemption on those assets that currently exist will be removed post 1st of July 2027. Now, all asset classes are impacted. They haven't distinguished between property or shares or any other things, whether that's shares in a business, etc. And it applies to individuals, trusts and partnerships, not companies or super funds. Now, the only exclusion at present is effectively what they call new residential builds, and we'll talk about that a bit more later, but they can still adopt the current 50% or indexation as a preferred method of calculation.
Okay. So I guess from that point of view, with what you've just explained, there's a fair degree of grandfathering that we can see. And so just to get this right in my own head, existing assets, so people who own those existing assets today, these won't be taxed retrospectively. Is that what you're saying?
Yeah, that's right. So there's transitional rules for existing investments. So at the moment, we operate under a CGT having a 50% discount for those structures that I mentioned earlier.
Yep.
And pre-CGT assets are exempt. Now, it's effectively they will be grandfathered up until 1st of July 2027. So through to that point in time, the same rules apply. What that means is that if there's a sale of an asset post 1st of July 2027, you'll actually have two CGT components or two calculations assessed under the pre-rules, so as in pre that date and post.
Okay.
So under post rules, whereby an asset spans both periods, there's potentially two methods to determining the values. One is effectively evaluation, which is a little grey at the moment as to what the requirements of that are. Or two, it's a pro rata of the gain based on the time pre and post that 1st of July 2027 date.
Okay.
Any gains then post 1st July 2027, indexation has to apply. But anything pre that date, the existing rules apply. Quite complex.
Yeah, it does sound it. I guess from that point of view. Now, if we were to step back from politics for a moment, do you actually think there's some merit in what the government's trying to achieve here, or the execution sounds quite complex? So, but in terms of what they're trying to achieve and the rationale behind what they're trying to do, does it pass the sniff test?
Yeah, I said all along, and we've been arguing this in-house for a while, is that grandfathering would have to be considered for the existing assets, and thankfully that has been adopted. Yeah. What we didn't see coming was how pre-CGT assets would be impacted. Now, as time goes by, those become less and less, of course. But what they're doing is effectively, in my view, putting a line in the sand at 1st of July 2027, and all future gains then apply indexation with a minimum of 30%, except for the new builds. So you're right, it's going to be complex. There's plenty of work for the accountants amongst us, but I think it is a step in the right direction, although the collection mechanism from this process will be slow and over a long period of time.
Yeah. It also, I think it's also ramped up the importance of accountants moving forward, I dare say, Anthony. So you'd be smiling like a Cheshire cat.
They will never be able to work whilst the government's in play.
No, fair point too, mate. Fair point too.